So, what is the essence of great investing? Let me take you through what our students find particularly useful. Okay. The vast majority of them, whilst we give them a filtered list of equities to go through, prefer the cake to be made for them. Let me explain what those two scenarios are. The filtered list is as if you're giving somebody a recipe and some ingredients of all these companies. And you can see we've got companies on the London Stock Exchange, NASDAQ, New York Stock Exchange, Europe. All of these could go wherever you are in the world in your pension, whether you're in America, Canada, or the United Kingdom. And the reason we go through 10,000 companies, and by the way, none of these meet our criteria because we need all of these factors to be green. Why? Where do we get them from? I'll explain that in a second. But this is like getting the recipe and the ingredients. Now, some of my students say, well, can you make the cake for me? Well, that is what a model portfolio is, where we've made the cake. And I'll show you one of those cakes we've made in a second. But essentially, what we're doing here is we're saying, from the academic research we have, which I share with my students on an online program with all the videos, and they don't have to look at the education, but at least it explains to them why undervalued companies do better than ones which are overvalued but are not guaranteed to. Growing companies do better than ones which aren't growing. So we pick companies which are at the intersection of being undervalued and are growing and have strong cash flow. We get that from Goldman Sachs Wealth Management, Momentum from the hedge fund industry, Sortina from the hedge fund industry. Now, we know these are important factors because we relied on the work of, in particular, three Nobel Prize winners. They are Eugene Fama, Richard Thaler, Daniel Kahneman. And we've also looked at the work of Goldman Sachs Wealth Management, what they show their wealthiest clients as well, just to make sure that we were well aware of what's important in generating exceptional returns. What that then allows us to do is then filter that down. So we give the clients this. Now, the point is they could take my place on the BBC with all this data, but this is just a ton of data. Giving data alone doesn't necessarily help a client because if they don't have the knowledge, then they've just got a ton of data. And that doesn't really, as I say, help. What they really want to know is, well, can you also give me on top of that, can you also give me the know-how? This is why we do the one-to-one tutorials and why they have me for life and my team. Don't forget, I've got a whole team behind me who's something, if I fall under a bus, all the education's online anyway. And the reason that's important that it's online is because then they know they've got something for life as well as the data being provided to them as well forever. I'm going to show you something else which we found to be incredibly important for the students. Uh, we help them with the decision making. So when it comes to investing, you want to have little flow charts like this to help you with the decision making. Okay. Now, that was a bit of a game changer for a lot of my students. I'll share some of the other game changers as well. One of the main questions we're often asked on the Great Investments Program is, what makes a great investment? What should I do once I've got one? And this little flow chart helps them with that decision making, and I walk them through it. But what's the end goal? It surely isn't just to pick a few stocks. We're not here to be stock tippers or some kind of newsletter which is breathlessly saying, buy this stock. Now, no, we want to create portfolios. And the question arises, what do those portfolios then look like? Now, before I get to that, let me show you something else which is incredibly important, which we discovered from our students. They essentially wanted a mini MBA in becoming their own investor. So we managed to put all my 18 books, my 200 columns in the Financial Times, all my 300 Bloomberg TV shows, compress them into just 2 slides. And these are they, which answer all their essential questions for those who are too busy to do it themselves, those who think I can't possibly do this myself. But it gets better than that because what we realized is, of course, everybody wants a bespoke solution. And in order to judge that, we created investor personas for each of them. We give them a checklist, so they never have to remember all of this material because there's a little checklist. And then I go through it with them and discuss it. And it also allows them to determine their risk appetite. And then suited to their risk appetite, we can easily say, based on all of that information, what they might want to look at from an investment perspective. But again, as you would expect, we make life quite a lot easier than that, because the other questions then arise. Well, wait a minute, Alpesh, what are the major pitfalls? So we anticipate those pitfalls and we tell them, well, actually, these are the things that are going to happen. So we're hand holding them through the most difficult times. I also have on my private Telegram channel to them a twice weekly market update, that they don't need to watch that, because most of them will pick a portfolio and contact me once a year, but they can do it more frequently if they wish. But then, of course, the question also arises, well, hang on, what if I'm worried about the markets? Or what if I want to go all in? And so by giving little frameworks like this, it makes life even easier. But we've left the best to last, of course, which is, hang on, what are some of these portfolios you're talking about, these models you're talking about, and how do they perform? So this is at the time of recording. We created a bunch of model portfolios. And of course, the individual clients, we create specific ones for them based on what they select. So some of them might say, well, I don't want a particular stock, I prefer something else. And we've got a couple of benchmarks here, the FTSE All Share, the S&P 500 as well. And these are ours and a couple of the client ones as well. So let me show you what we're looking at when we look at that, because we want the clients to always have full transparency. And what does that mean? Well, let's say they bought into a portfolio such as the one that my wife and son have, for instance. Okay, so it's not about individual stock picking. What would that one look like? And we call that the Quality 5 Plus. There's about 44 companies in there. And the great thing is the clients always have these little videos they can click on here, documents they can go to if ever they forget something that I've already taught them. And this is its performance since 2017 and the drawdowns. That doesn't mean that those returns are guaranteed, but that's the end goal, to have a portfolio of companies that they can then, if the market falls, say, well, wait a minute, I've seen this before. That's fine. I don't need to worry. And the reason that's incredibly important is because you want to have peace of mind. And again, that's part of what the Great Investments Program delivers. See, when we show the clients this kind of data, which sits in their personalized, bespoke Google Drive, it means they can see that actually stocks are sometimes underwater for a prolonged period of time, and that's fine, or portfolios are. And those are the drawdowns, and that's fine. And they see this month by month for each individual stock historically. So whatever they're looking at right now, they can say, oh, it's done it before, I don't need to panic. Panic and boredom is what we're trying to get them to avoid. But again, it gets better than that. We didn't just look at what performed well in the past and said, let's just pick those. That'd be silly. It'd be like saying, pick me the best 20 stocks of the last 7 years and I'll just buy those. That doesn't make sense. No, we looked at today what on the Excel spreadsheet, what we call the approved list, value, growth, income, cash flow, Sortino, was filtered down and looked good by that filter button there. None of these, unfortunately, which makes our point that we're very, very stringent. We have very high standards of what would get into a portfolio. And then based on the client's individual risk profile, look to see if there's an overall portfolio created. Does that give them the safety margin they want, i.e. not too many drawdowns, but the kinds of returns they're after, and is it possible? Okay, and if it is, and we share that with them, and it always is, because you just iterate until you get to that point, so they've got something that ideal for them. You can see here how we're using the approved list to produce the model portfolios. Now, in a way, what we're doing is we're doing all the hard work and the donkey work for them. That's the benefit of the program. We're doing all the hard work and the donkey work for them, but giving them all the data. So think of it as almost like management consultants. You know, you're now running your own investment, or you're a busy professional, or you're retired, and we are educating you, but also you're hopefully educating your children. So you're passing on a legacy. And by doing that, you've got all the power. You got all the control because you manage your own capital with whichever brokerage you want. You got the names of the companies and the portfolios. And we also show you, from using material from Goldman Sachs Wealth Management, how much cash you might want, what it looks like, what the projections look like, although there's no guarantee the future will reflect the past. And why these companies today look good, not based on narrative, but based on data, not based on narrative and breathless headlines, but based on data of value, growth, income, cash flow, i.e. their P&L, their balance sheet, their cash flow statement. And then we said, well, yeah, that looks all good today, but what happened over the last 7 years when perhaps they didn't look so good? Did the portfolio still look great? And when we look at that and we say, oh, yeah, actually, it's been delivering 31% plus. Not every stock went up every year or every month, and the portfolio didn't go up every month. But overall, I get it now, Alpesh. I can see why somebody like Warren Buffett's very relaxed when the market falls because he knows he's got a resilient portfolio. And that's what we're building. Volatility being a friend, not an enemy, giving you peace of mind, causing you not to panic and not to get bored. And that's the essence of how the Great Investments Program works. It's like nothing you've ever seen before because it's not stock tipping and stock picking and breathless headlines and narrative based. It's data driven. It's a one-off cost for access for life. There's a team behind it. So even if I drop under a bus, it's fine because you've got all the education, the information, the data. But equally importantly, with all of that, you've got access to me and my team for the rest of your life as well, should you need it, and regular updates. The reason we did that is because it's the only possible way to get over the conflicts of interest that the fund management industry has, which is they want to just keep charging you fees forever. So they've got to lock you in. And they won't tell you that they're picking from a very small group of stocks, such as just only UK ones or just European ones. And they can't tell you to go into cash in years like 2022 when it's sensible to do so. And because they're managing so much capital, they're not bespoke to you by any means. You're just on a conveyor belt. Anyway, I hope you'll agree that as an approach, given that it's based on data and academic research and the research coming out of the biggest, best wealth managers like JP Morgan, Goldman Sachs, and so on, and all of this material published in my books, you can get a copy of some of them from alpeshpatel.com/links. I hope you'll agree. It's revolutionary, and that's my ambition. Eventually, the ambition is to have an alternative type of asset manager where you're in control, remove the traditional asset managers out of the market, or certainly take market share from them, and potentially float the company. For now, it's just to build up that base to prove that it can work. And we're doing that very well. Hope you'll join us. Thank you very much.